Hey everyone, welcome back to Dave's Market Explorer. It's great to have you here. Today, we are diving deep into what the market might have in store for us over the next few months. There's a lot of chatter out there. So let us cut through the noise and look at what the data and key indicators are suggesting. Based on the information I've been tracking and the patterns I'm seeing, it looks like we could be in for a period of steady, upward movement in the market. Likely grinding higher as we head into April. This potential upward trend could continue for a little while, creating a sense of optimism. It's the kind of market where it feels like the momentum is on our side, and many stocks could see some positive gains. However, the picture starts to change as we look further down the calendar. The period from April to June is where things could get a lot more interesting, and by interesting, I mean volatile. Volatility isn't necessarily a bad thing. It's just something we need to be prepared for. It means bigger price swings, both up and down, and it can create some fantastic opportunities if you know how to navigate it. So, why the shift around mid-year? There are a couple of significant events on the horizon that could act as catalysts for this change. A key date to circle on your calendar is May 15th. This is when a new Federal Reserve chair is set to begin their term. Historically, a change in leadership at the Fed can bring about shifts in monetary policy, or at least, the market's perception of it. Investors will be hanging on every word, looking for clues about interest rates, inflation control, and the overall direction of the economy. This uncertainty alone is often enough to stir up the markets. Adding to this, some well-respected analysts, like Tom Lee, have also pointed towards the middle of the year as a potential hotspot for volatility. When multiple sources start pointing to the same time frame, it's wise to pay close attention. It doesn't mean we should panic, but it does mean we should be strategic. This convergence of expert opinion and key economic events suggests that the calm waters of early spring might give way to choppier seas as summer approaches. So, what's our game plan? How do we position ourselves to not only weather this potential storm but actually come out ahead? The key is to start thinking defensively as we move into the second quarter. This doesn't mean selling everything and hiding in cash. Instead, it's about adjusting our portfolio to be more resilient. This could involve rotating into sectors that typically perform well during uncertain times, like consumer staples or healthcare. These are the companies that sell goods and services people need regardless of the economic climate. Another defensive move is to ensure you have a healthy cash position. Having cash on the sidelines during a market downturn is like having a war chest. It gives you the power to act. When other investors are selling out of fear, you can be the one to step in and buy quality stocks at a significant discount. Think of it as a sale on your favorite companies. These are the moments that can set up your portfolio for substantial long-term growth. Volatility creates bargains, and being prepared with a defensive posture and available capital is how you take advantage of them. Let's recap the strategy. For the near term, into April, the trend appears to be our friend. We can enjoy the potential grind higher, but as we approach the mid-year mark, we need to shift our mindset. We'll be watching for signs of increasing volatility, driven by events like the new Fed chair appointment and other market dynamics. Our plan is to start positioning defensively, perhaps by reallocating to more stable sectors and building up our cash reserves. The goal is to be ready to pounce on any opportunities that a market correction or sale might present. This is proactive investing, not reactive. We're not trying to time the market perfectly, because that's nearly impossible. Instead, we're preparing for a likely scenario based on the available information. By doing so, we can turn a period of potential uncertainty into a period of great opportunity. That's the outlook for now. We'll keep a close eye on how things develop and adjust our strategy as new information comes to light. Thanks so much for tuning in to Dave's Market Explorer. If you found this analysis helpful, please give this video a thumbs up and make sure you resubscribed so you don't miss our next update. I'll see you in the next one.